Knows how to use Zoom. There's going to be a presentation and by myself. I'm Victoria Alexander. I've been running this workshop in person for on and off for the last maybe 13, 14 years. I started Realty Collective 15 years ago. I'm the founder of Realty Collective, a Brooklyn-based boutique real estate agency. We specialize in overcoming the stereotypes associated with real estate and take an ethical approach to our practices and to offer a more transparent experience. I have worked with Rashida for a very long time. She was actually my lawyer when I bought my house 10 years ago. And there's a crazy tale about how I ended up buying my house. And then I worked with Lisa because we wanted to start an all-female team. And I was interested in working with Lisa because she was a female loan officer. And then I heard great things about her from other realtors and her former clients. She specializes in first-time home buyers. All the, I have to admit all, or else it drives me nuts. First-time home buyers, and is an expert in the New York City area. So the three of us together are your all-female team looking to help everybody, not just ladies, buy real estate. So that is us. Lisa or Rashida, do you want to add anything to what I said?
Yeah, well, glad that we have so much participants, and thank you guys for, coming, re-signing up again for today's presentation. I've been practicing for the last 17 years, primarily do residential real estate. And I practiced when we had kind of like the crisis with the loans and the banks, and now we have this COVID-19. And the good thing about New York real estate is that it always bounces back, and there's different precautions and things that we can do. And that's why we're here today. So look forward to discussing with you guys.
And hi, I'm Lisa. Super excited to have all you guys on the call. So yeah, Cross Country Mortgage is a mortgage bank. So it means that I work like all the big banks, but all we do is mortgages. I've been here for about 6 years. I really love it. I love our company because we have a real wide variety of products. So it really helps me find the right product for my specific client. And I think, despite everything that's going on in the news right now is actually a really exciting time to look at real estate. So, so excited to see how I can help.
And with that being said, I'm going to share my screen. I'm going to close all my other windows first, and I'm going to share the presentation. Let's see. There we go. Okay, so welcome to Buying into Brooklyn. Let me make this the whole thing so it's prettier. There we go. So why buy? There's lots of reasons to buy. The rent's too damn high. Even though rents are coming down a little bit, you're still not building equity by renting right now. You get to create your own design, investment, long-term, short-term. You're building equity. There's a lot of great tax benefits to buying. Sometimes buying property can be income generating for you, gives you stability. And for me, in these times, I love Brooklyn. This experience has only made me more committed to loving Brooklyn or wherever you are. And I think that it's important to build a future here by buying something here, because renting only keeps you at somebody else's whim. So that's why. And then if there's a rent versus buy matrix that is a calculator, can help you plug in all your personal information, how much money you make, how long you plan on staying in the place, what you pay now for rent. And this matrix will calculate for you if it's smart enough for you to buy. If you have a rent stabilized apartment for $1,200 in New York City, it might not make sense for you to buy something. But this calculator that I will share with you after this presentation. I like Eileen shaking her ideas. Please share that, please. We'll help you figure it out. I would say a good rule of thumb is that you need to plan on staying in New York for at least 5 years and holding this property for 5 years. And then the thing that you need to create after you've decided that you no longer want to be a renter, you no longer, sorry, I'm going to mute everybody, no longer want to pay rent anymore, and that the calculator is telling you it's a smart thing to do is to buy something, then you're going to assemble your dream team. And you need a team of experts, just like you would need an expert if you were going to redoing your website, or you were going to, some people need doctors to help them have babies, or doulas. You need a team of people that are going to help and guide you through this experience, because they do it all the time. And so those people are, whoops, I'm pressing too many buttons. Your attorney, your mortgage broker, your real estate broker, and then you possibly will need a contractor, an architect, an inspector, and most importantly, you will need lead time. Some people called me last week and were like, our lease is up August 1st. We want to buy an apartment. We saw your class. I'm like, that's very ambitious, but let's try. But you have to say that things are taking a little bit longer now during COVID than they were beforehand. So we used to give people 30 to 45 days, maybe 60 days for the actual closing. And that's after you find the property. And if you are not somebody that knows exactly what you want and understands what you want, you can actually afford, because those two things are the hardest things to align, what you want and what you can afford in New York City. That's why it's a great time to be buying, because those things are aligning a little bit more. It'll take you some time to make those realizations. So you need some time. You guys want to say anything about assembling your team?
Well, that's the most important thing, honestly.
Yeah, I would say that also in regard to you want to have an attorney that handles real estate, because then they know the nuances on what's going on regarding your contract of sale. So generally, I get clients that come to me either before they start looking because they're friends, etc. And you want to start assembling your mortgage person. You want to get pre-approved. You want to have your attorney, because once your offer and your realtor, once your offer is accepted, that time period between acceptance and contract signing goes pretty quickly. So it's very important that you have these people lined up in advance.
Right.
And the other thing I just add along with that, with what Rashida's saying in terms of the mortgage end, and we'll talk a little bit in a second about sort of the conversations you have with the mortgage, but when you're putting your team together, particularly in these times when mortgage companies are very busy because rates are so low, one of your first questions as you're putting a team together should be a frank discussion with whoever you're working with on your mortgage in terms of what their turn times are like. If you found a property that you've fallen in love with and the seller's realtor has made it very clear you need to close in 60 days, you need to make sure you have a mortgage that will be able to meet that deadline.
Good to know. Okay, I'm going to just move on to the financing part, Lisa. So you're going to talk even more about this
Sure.
and go into how much down, credit score, FHA, and things to consider in COVID.
Right. So mortgage-wise, now is a really exciting time because rates are at an all-time low. So what that means for prospective buyers is that they're either going to be able to afford more than maybe they were able to afford a year ago because rates have gone down, and or their housing payment is going to be less than if they were looking at the same loan a year ago. So it's a really good time if you're thinking about buying a property to look at getting a mortgage. In terms of how much you can put down, there's really a wide variety of options. From the standard is 20%. For a primary, 25% or more for an investment property. But it can go down to as little as 10%, 5%, 3.5% if you do something like FHA. And there's also some special products in New York City that will allow less than 3.5%. However, for those situations, they're income restricted. So you have to make sure that you make only so much money to get that product. Typically, most clients are looking at either 20% down, 10% down with mortgage insurance, or 3.5% down with FHA. When you're looking for financing, in an ideal situation, you're talking to a mortgage specialist at the same time that you are just starting to look at properties, that you're just starting to talk to your realtor. The reason is because your mortgage professional is going to let you know how much you can afford, how much you're going to get approved for, and what your housing payment's going to look like. So, you don't want to sort of start looking at properties before you have a frank discussion with mortgage, because you might fall in love with something that's over the budget of what you can get a pre-approval for. And then, you like the property, but you're not going to be able to get a mortgage for that property, so it's sort of moot. Simultaneously, you might think, oh, because of my income, I can only afford a $600,000 purchase price. And you talk with a mortgage professional and you find that, in fact, you can be pre-approved for more than that if you want to. So that's why it's really good to have these conversations at the very beginning. And what's going to happen when you have a conversation with a mortgage professional is they're going to basically get a good picture as to what you're looking for, how much you make, what your debt is like, and how long you're going to be staying in this property. Are you looking for a starter home that you're going to stay in for about 5 years? Or are you really looking to make a move and you're going to be in that house forever? These are important questions to consider, because that's going to help me figure out the best product for you. If you're looking for a starter home, then a great product for you might be, a 5 or 10 year ARM, which means that the rate is fixed for 5 or 10 years and then it fluctuates. But if you're going to be leaving this property in 5 or 10 years, that might be a good fit for you. If you're going to have a property that you think you might live in forever, then a 30-year is probably the way to go. So those are the sort of conversations you're going to have. In terms of COVID, now that this has been going on for a while, there's sort of a few consistent things we've seen. The first is a typical standard process in a purchase transaction is an appraisal, right? The appraisal is done by the mortgage company to ensure the value of the property and that the loan and the value make sense with what you're buying it at. It's a protection for the bank. Typically, these appraisals are done in person and they go into the property. Since COVID, that's actually become much more flexible. So I'm seeing a significant amount of appraisals that are actually being done. They're called desktop appraisals, where basically they're using the contract and the research online to do the appraisal, and then just reaching out to the realtor for any questions they have. I'm also seeing appraisal waivers, which is actually really exciting, which means this morning I got 6 appraisal waivers. That's really great, because what that means is, first of all, I'm saving you money because I don't have to charge you for appraisal. Second of all, I don't have to wait a week and a half for the appraisal to get in to get your file to underwriting. So that enables, when things like that happen, which we're seeing more and more of, it allows the process to move much quicker. Which brings me to the biggest thing is actually not necessarily COVID, but just rate-wise. Because rates are so low right now, we're seeing more mortgage applications than we've seen in a really long time, which just means that it's super exciting, but it also means that everyone's really busy and things are really backed up. So things like the appraisal waivers are letting the process go as quickly as possible so we can get you that approval. And once you get an approval, then you start to get ready to close. So really more that, this is COVID, but it's also just volume related, which is why I think a really important question to have at the beginning of the process is, what do your turn times look like? Because that's going to give you an idea. Some banks are taking a ridiculous amount of time to get you an approval. And if it was me, I wouldn't want to go that route, because you want to get your approval from the bank so that this deal is going to work and you can give that information to the seller and, move accordingly to close.
Interesting. And I'm doing, the appraisal's not coming. I'm doing a deal with Andrew in Rashida's office, and the appraiser's not coming to the property because I sold something in the building a year ago, and they're using that appraisal to, and so he's going to say he's going to drive by.
So right now that we're seeing 3 different types of appraisal options, along with the standard appraisal, going in and doing what they usually do. You're seeing straight up appraisal waivers. You're seeing drive-by appraisals, which means they're doing most of the work online, and then they're just driving by the property to confirm that that property is what they've seen online.
It's a real building. It exists.
Yeah, that's not, it's not like the picture is a picket fence and then it's, a 4-story building.
Right.
Or there's also exterior appraisals where they're coming and they're just walking around the outside of the house and confirming what they can see outside, but they're not actually going inside the property.
Right. Interesting. Okay. Well, that's on the financing part of so that's the first thing you do. I know it's really, really exciting and people have a lot of internet time right now. And the first thing, I'm sure everybody's already done this, is start, looking at real estate porn. You're just like on there, you're on Street Easy, you're on all the sites, you're looking at all the pretty pictures, and you have not figured out how much you can afford. And you want to make sure that your expectations are in line with what your budget is. And so those are really 2 important things to make happen, so that you don't feel a sense of disappointment, because overcoming disappointment, I know, can be really challenging for people, and you'll lose time and you'll lose time on getting access to the great rates and things that are happening in the moment of the market right now. So
Victoria, can I jump in for a second?
Yeah, sure.
Because someone commented and I forgot to mention about credit scores. So let me just do that before I forget.
Okay.
So FHA already sort of mentioned, it's that's the product that allows 3.5% down. So an FHA is a very good product if you're looking at putting less than 20% down. Depending on your credit score and the specific property, sometimes it's better to do what we call a conventional loan, which is basically your normal loan with private mortgage insurance, versus an FHA. And it's really just which one's more cost effective with how much you want to put down and what your credit score is in terms of what the property is like. So those are sort of your 2 options with private mortgage insurance. Basically, if you're not putting 20% down, you're going to have some sort of mortgage insurance. That's sort of a security for the bank because you're not putting the standard 20% down. Your credit score, when you talk to a mortgage professional, they should be running your credit. And you typically want to don't let everyone run your credit. Wait until you have a relationship with the mortgage person that you're like, this sounds good. I want to see some numbers from this person. And then give them permission to run your credit. Personally, when I run the credit of my borrowers, then that credit is good for 90 days. So I'm not going to run it again until we'll hopefully close by then, or if you're still looking, then we would run it again in 90 days. A few mortgage companies running your credit is not really going to affect your credit. The only times I've seen it affect the credit score is if you have 10 companies run your credit within like a week, that's not the smart approach you want to take. But your credit score is really important for your mortgage professional because that's going to tell you what your debt looks like, and it's also going to tell you what kind of rate we're going to get you because the credit score is a determining factor. So that's sort of, those are the 2 other elements of the financial segment.
Yes, those are important too, to think about. We could talk about that in a little bit. I was like, somebody was telling me still the points still exist right now too. So I'll wait and we can see if somebody brings it up at the end. So I was thinking, trying to figure out what you are looking for is super important. Because if you are doing an FHA loan, that is going to eliminate you from buying a co-op. If you do want a doorman, you have to buy a co-op. If you want pre-war and versus new construction, you're mostly going to get a condo. It's all new construction, and then that is going to steer you towards neighborhoods that have new construction, like Williamsburg. Usually, like Cobble Hill, Carroll Gardens, there's less new construction there. There's less co-ops and condos, but some do exist. A lot of co-ops in Brooklyn Heights. So aligning your location, the type of property, and the amenities you want is super important part of the search process. And so having a conversation with me about what you're looking for, and then I can steer you to what neighborhoods have a product that will fit your needs. So I just sold an apartment in Sunset Park. I'm really keen on that because it has not only it has co-ops and condos, but also has some townhouses over there too, and it's right next to Greenwood. So I'm sweet on that neighborhood right now. Then where do you search? So when I did this presentation over the last couple of years, we used to tell people street easy, street easy, street easy, street easy, because they were touting themselves as being the consumer's platform and that everybody was going to be there and they were going to, pull all the information and make sure it was accurate. And but they have changed their platform so that they charge people and they charge brokers, and that brokers have started boycotting them. So there will be properties that are not on Street Easy if you're searching. So there is not a new place that's a catch-all that's public anymore. The MLS that brokers use here in New York is related to Rebney, and I would say that's the most reliable thing to be a good, pulling all of the listings together in one place. And there just isn't a public place for clients to have that anymore because Street Easy's really changed its policy and the way that it's treating brokers. So brokers have started to boycott that platform. I know other people, I'm sure people are using Zillow. Zillow owns Street Easy, Trulia. I'm sure you guys could put in the chat other places you're looking that maybe we don't know about. I'm always keen. Like I know for rentals, people are now using Lease Break and Listings Project, stuff like that, especially during COVID. So if you guys have any interesting places you're looking at real estate that are out of the norm, put them in the chat. I'm always interested to see where people are searching. So I will set up a search for you that you have access to the MLS so that you can get all the information into one place. But Street Easy is still a good place. You're just not going to get everything there anymore. Then we have making an offer. We have to, so you have your financing together. You know how much you can afford. You have a pre-approval letter from Lisa that she can change based on what we're offering. And you have looked at the other properties and you know the comps, and we've discussed everything. You have filled out the forms. There's a submit offer form. You've written a beautiful cover letter specifically about that property, telling the owners how much you love it. And it is super important. And I think it makes a big deal to get your offer in on the early side. Dragging it out, I've seen so many deals go through for my clients because they were the first offer, but not the highest offer. And the sellers felt like they made a commitment to the buyer. And so they held on to that first offer because they felt like, oh, it's only $5,000 or $10,000 difference, but I already told these people yes, and they already started like putting everything in the works. They felt like they made, even though there's no legal reason that they had to go that route, that they felt obligated personally. So getting your offer in as soon as you know that you want the property is super important. What else can I say about making an offer? Your cover letter, you have your submit offer form. Rashida, what am I forgetting about the offer? Oh, the contingencies. Are you going to have a contingent on financing? Are you getting financing? Are you going to have an inspection done? The contingencies of your offer. Your offer needs to be contingent on a bank giving you the loan. If you have all cash, you don't need to make your offer contingent on getting a loan. But it's important that you outline the contingencies in your offer so that they're accepting you based on what you're promising you can do. Like, you can contingent on you renting the place ahead of time, or you closing in 60 days, or whatever the terms that you think, the seller is going to help pick you. What can you offer to get chosen? I don't know if I have any more info on the making of the offer. We are going into bidding wars now, surprisingly, that's happening. And lots of interesting things are happening. It feels like really an exciting market right now. Getting into contract. So there's some pre-due diligence stuff, and I would think, Rashida, I'm going to hand it over to you to talk about getting into contract.
Yeah, so kind of segue, there is a lot of activity right now. Even this week, it's like we're Tuesday, and I've had 4 new deals come in already. And it's a variety. It's co-op, it's condos, it's houses. So people are definitely starting to see movement, and kind of the things, when you negotiate your offer, we get as an attorney the deal sheet that has the basic information: who the seller is, who the buyer is, amount of your mortgage, and time period of closing, typically on or about 60 days. But a lot of times what's happening now is, if you're buying a house or you're buying a condo or a co-op, depending on the size of the building, you may have to get an inspection. In New York, you do your inspection prior to signing the contract. I think now as things start to ease up a little bit more, the inspectors are actually going out to the properties and doing an inspection. A lot of the properties that are already vacant, they can get it access and do the inspection. But if it's a property that's not vacant and the seller doesn't feel comfortable with having an inspector come in and touching everything and doing those type of kind of going into their rooms, we may have to add an inspection contingency, which is something unusual for New York, which is more in New Jersey, you have an inspection contingency. But now we start seeing some properties where they put an inspection contingency in New York just because of COVID-19. And one thing to point out, even though your offer is accepted, you're not in contract until both parties sign the contract of sale. So that means you've met with your attorney either remotely, and then you sign and give the down payment, and then the seller signs it and returns to you. And people sometimes don't understand that. And unfortunately, that's where the bidding wars come into play. And even you may do your inspection and then they have another offer and they go into that contract. So we try as your attorney to try to get you into contract as quickly as possible. So if you have to do inspections, we try to have that done right away. Some of the things that before you sign, we want to make sure about your mortgage. Typically, your contract has a 30 to 45 day time period to get your mortgage. So one, are you being pre-approved? How much, are you still shopping around your mortgage? Because that 30 to 45 days time period goes pretty quickly. We can always extend it once you're in contract, but we really try to keep to that time period because that's also what the seller is looking at as far as the time frame to close. Mortgage contingencies, I always say also regarding your rate. You want to make sure that your rate, if you're locking in your rate, that is through the contingency time period, through the closing time period. Victoria had mentioned a little bit about the closing time period. Your contract of sale typically was on or about 60 days. In New York, that on or about language gives you an extra 30-day period, so roughly 90 days for a closing. Closings have been going a lot longer now because of COVID-19. Co-ops weren't allowing move-ins. The co-op attorney wasn't allowing closings. The bank had to get the file clear to close. So those things were extended, that 90-day closing to. I had a contract that we were in contract since March and we just closed last week. So since February and we just closed last week. So those time periods, we want to make sure that we adhere to that. I've been trying to put in some of my contracts COVID-19 clauses where you have a right to either cancel the contract if for some reason you become unemployed as a result of COVID-19 through no fault of your own, if you can't extend your rate, if you can't extend your mortgage, because once you get your mortgage commitment, you're in a firm contract. And if something happens after that, it's your risk that your down payment may be at jeopardy. So we try to put in these clauses, especially with a potential second wave that may be happening. But once again, it's very important that you speak with your attorney about what those time periods are because they are pretty strict. What else about the contract? Inspection, your final walkthrough. Those that are in contract now, they've been doing some are virtual walkthroughs. Some are what we call socially distanced walkthrough, where they leave the key under an area and then they do the buyer goes in and does the walkthrough and then the realtor closes up. I haven't had one yet where we've had to close with money in escrow because they weren't able to do a walkthrough, but I have heard about those. So I think as things start to open up, that type of, we try to make sure those clauses are in there that you do have to do your final walkthrough, making sure you understand the as-is portion of the contract of sale, and getting you to the closing. Wires are being used a lot now. So getting you into contract, you meet with your attorney, you go over the contract of sale, you sign it, then you either putting down that 10% or that 3.5% on signing. Before it was actual physically a check that you would write, you would give your attorney would overnight it to the other side's attorney and then wait for them to sign. Now, because a lot of the offices are not open, we're doing a lot of wires. So I tell clients, if you have to move around money, make sure that it's in your checking account. If you're sending any wires, make sure that you're verifying it verbally with your attorney before you send any wires out. And at closing, the closings now we've actually been doing a lot with wires as well. So I have clients wire me their money, and then we have to show the bank that we received that money from their bank account. But it's also it's actually it's moving things along, I would say. In New York, I don't know if anybody is looking into New Jersey, but I practice in New Jersey as well. And kind of the procedures that we're doing now are similar to what the New Jersey attorneys, we were doing prior to COVID, where wires were being utilized, remote closings and things like that, and contracts signed via electronically. So now the contracts are being docu-signed or faxed and scanned back to your attorney versus actually having wet signatures. So those are some of the things that we're doing. You're on mute. Okay.
I got it. And then we have, just after we're getting into contract, and I want to move sort of this because I want to make sure we have enough time for everybody's questions. There's a lot of questions in the chat and I'm getting privately. So then after we get into contract, everything's negotiated. Then we're moving into due diligence and underwriting. And that's where Rashida and Lisa take over. My job ends at getting you into contract.
So I guess, go ahead.
Due diligence, I forgot, it depends on what type of property. If you're buying a condo and a condo or a co-op, your attorney does the due diligence prior to actually signing the contract. That's reviewing the offering plan, the financials, the minutes to make sure that even though you physically like the property, you're buying into a financially sound co-op or condo. So that normally takes about a week, depending on the management company. And now they're sending us a lot of stuff via electronically. So that's made it process a lot faster. But we do that as your attorney, as I said, prior to you signing. But it is very important that your attorney does know to review minutes, review the offering plan, review the financials, get the budget, get your alteration agreement, get your sublet policy, get the co-op or condo application, because all of these things you're going to be subject to once you get into contract. So go ahead, Lisa.
Yeah, and I mean, just on the mortgage side, the underwriting is, so basically that step in the process is, once you've worked with Rashida, you have fully executed contracts, then those are sent to me and we, app the deal. So we basically make the loan application live, right? And you get initial disclosures to sign. And then basically the team that takes over is my processor and my underwriter. And what the processor is doing is working with you to get any additional documents she needs so that the file is complete. So as soon as the appraisal comes in, if an appraisal is needed, it goes to the underwriter. And then what the underwriter is going to do is her job is to review the entire file and make sure that the loan fits the guidelines necessary for that program. Once she reviews all of that, then you will get a approval or a mortgage commitment, like Rashida said. And that commitment will basically be, you are approved for this loan. An underwriter has signed off on it. And then there'll be some conditions, things like proof of insurance for the property that you're buying, right? When you buy a property, you have to prove in order to close, that you have paid for homeowners insurance for the year, if it's a single family home or a condo, things like that. So your job will then be, typically there are very few conditions, and your job is just to work on those while we get the last things we need from title and attorney, so that then we can get the clear to close. And once you get the clear to close, that means mortgage is signed off, we're ready to go, this deal is done, and then you schedule with your attorney to close the deal. And then you have a home.
So that's when we go to closing. And at closing, I didn't go to my first closing on Friday because it was a virtual closing. Well, the buyers just went to the office. Like, the sellers weren't there. Nobody was there besides the buyers and the attorney. And the buyers actually brought me my check. Like, so weird.
That's what I tell clients, we've actually been consistent with having closings during this entire process. But I call it closing during COVID. So it's more, you're meeting one-on-one with your attorney.
Right.
The seller's attorney is overnighting documents, whether it's a title company. We're doing a lot of things via wire. So it does closings in the regular normal course of time period. It would have taken 2 weeks after you've been cleared to close to schedule a closing. Now we're looking at 3 weeks, just so everyone can have enough time to get certain documents signed, overnighted, reviewed, especially if you're buying a co-op, because there's like this extra layer of items that we need for a closing. During pre-COVID, everyone sat around a conference table. It was roughly 10 people at a closing table. Now it's you and your attorney, and all those 10 people are now into this one kind of remote closing aspect that we have to get done, and funding approval, wires, all of that. But we are making it happen during this time period. So I just tell clients, be patient, but it is happening.
Okay, so I'm gonna just reiterate the whole thing really quickly about buying right now. My job is to be your coach, to get you across the finish line, to help you find the property. It's not to help you find the property that is needle in a haystack and nobody else knows about it. It's to find the property that's right for you based on your needs. Everybody just needs that person to make sure they're not overpaying, help them strategize on making offers, all this stuff. You need Rashida and Lisa to then make sure you can legally you're protected and that you can actually afford it. So there's a team of people that are going to make sure you try to avoid as many mistakes as possible, but they still do happen. And just be prepared that it's an emotional roller coaster. As long as you know that you're along for the ride, then you'll be fine. So I'm gonna start going through some of the questions. If you could raise your hand if you wanna speak instead of me reading some of the questions out of the chat. There are a lot of questions in here that I'm going to try to scroll up to. And thank you, somebody did put the New York Times rent versus buy calculator in the chat, which I will share again with everybody, so you guys have it. And then some of the questions are, is the effects of a appraisal waiver?
There's no effects except that you saved on having to pay for an appraisal.
There's no negative effects.
Yeah, no. It basically just means that the deal is so solid that an appraisal is not needed. It's something through the underwriting system. So it's not something that we can guarantee up front. It's specific per each deal. So
somebody's asking about what you need for a credit score to get an FHA loan. I got an FHA loan back in the day, and I also had a co-signer for my FHA loan just because I could not get the 20% down together to buy my property. There's a couple questions actually about that.
Yeah, so I think I'm looking at them. So typically an FHA, so in terms of credit scores, typically a minimum credit score is somewhere around 650-ish. Typically it's difficult to get a standard mortgage below that. Again, I want to emphasize that every mortgage program is different. And so it really, don't think, oh, my credit score is below 650, I shouldn't even bother. You really need to have a discussion with someone to help guide you through what might be possible either now or a little bit further from now. I see someone put in FICO Finesse that there are credit repair agencies. I highly suggest you talk to a mortgage professional and work with someone that they recommend, because those are, again, relationships that will prove to your benefit to use someone that they recommend. In terms of FHA co-signing or going an FHA route, there's positives to either option. And again, I would recommend that person maybe reach out to me and we can have a conversation. But generally, if you can do a co-signer without doing an FHA, that as long as that works for the application, that would probably be a better route, because the one thing you have to remember is with FHA, you're going to have mortgage insurance built into the loan. The only way you get out of mortgage insurance with an FHA loan is to refinance out of an FHA loan. So again, that's something that you should probably, feel free to call me or have a conversation with someone, and they can really give you numbers with both options. And then you can decide if that's the right move you want to do.
On the FHA, like my parents, they're on my mortgage, but they don't own any of the property, but I can't remove them just because, I couldn't get off them, the FHA loan. But right. I did get my PMI removed because it appraised, the value of the property went up over the time. So there is ways to do it. Somebody asked about, should they talk to a mortgage broker versus speaking to the person that they currently have their mortgage with? And I'm going to speak to myself on that and answer for Lisa. You should so I have a mortgage broker. I mean, I have a mortgage company with my current mortgage, and I just bought a house upstate, and I did not call my current mortgage company because they only have the products that their bank offers. And when you speak to a mortgage broker, they usually work with multiple banks, sometimes hundreds of banks, and based on your criteria, your needs, they're going to be able to match you with the best mortgage product, not just what that bank or that institution offers. So it's really that you just have a lot more options, especially if you have hurdles and things and blemishes that you need to overcome. It's your best interest to talk to one or two people to get an idea of what kind of product they can offer you. Don't walk into your branch. The only advice I'm telling you is, like, do not walk into your branch for your Bank of America to get a mortgage. Do not call your uncle who's a lawyer to be your lawyer. You want a New York City real estate attorney that specializes in New York City real estate, that has done co-ops and condos. It is specific. You can't just get a regular lawyer that, is helping people with lawsuits. And you need and call a mortgage broker. Do not walk into your bank down the block. Those are my two things to stress here to help you start this off. Just talk to the right people. Make sure you have the right people working for you. I've worked with so many lawyers that kill deals. Uncle Joe is not helping you. So that was the one question about mortgages. The down payment programs. Someone's asking, what's your take on down payment programs? Is that something you can talk to?
Yeah, so I sort of mentioned the most standard one is Sony May for New York, down payment assistance programs. So that's usually one of the better ones because it is a state of New York program. But again, it's income restricted. So for 1 to 2 people, you're looking at a max income of 102,000. For 3 plus 119,000 a year. So the down payment assistance programs are helpful, but that, they're not going to be what you want if you're looking at like $1 million property, because you're probably, if you're looking at that big of a purchase price, your income is going to be too high for that program. But they are out there.
Yeah, I was going to say there's also like the neighborhood housing services. They have some grant programs that are specific for neighborhoods. So you can always look into that. But just always be aware of when you're using any assistance program or first time buyer programs. If you're going through your bank, you want to make sure that they're aware of that as well. I know I've had clients that have gotten grants from for their down payments or for their closing costs through the neighborhood housing services programs in certain areas of this, like Brooklyn, the Bronx, etc. But once again, it's just you have to make, and the time period for them to get the grant and closing, you want to be aware of that. But there are some other grant programs that are out there.
And I'm going to go back to Max's question real quick. Freelancers can buy. So we just did a blog post about this at Realty Collective about how freelancers should prepare to buy property. There is a loan, or there was before COVID, a no income verification loan that you could easily go for if you were willing to pay a higher interest rate. So that's an option.
Those have clamped down a little bit.
Oh, good.
Right now, but they will be
one before COVID.
Yeah, but they will be coming back. But self-employment is so if you're a self-employed borrower, I mean, I would love to work with you, but just personally, I'm giving you some advice. Do not get a mortgage from a big bank, because right now the big banks are staying away from self-employed borrowers because of a lot of the COVID situation. So if you are a self-employed borrower, your first conversation with your mortgage professional, the very first question they should ask you is, are you working right now? Has your business taken a hit from COVID? And what do those numbers look like? Because that's what an underwriter is going to ask. So you absolutely can get pre-approved and can buy a home if you're self-employed right now, but you need to be prepared to answer those questions. And a good mortgage professional will make sure that you guys have those frank discussions up front, so there's no problems down the
line. Some of the other questions, with various property types, the monthly maintenance fees, for example, co-ops versus condos, which is more. co-ops historically have higher maintenance fees. You're paying for the underlying mortgage of the building. You're paying usually for a lot more amenities than you would for a condo. This is like a much bigger, sorry?
No, go ahead.
I was gonna say, this is like an actually like much bigger, because then the closing costs, like there's a trade-off for condos and co-ops, and just being aware of what the trade-offs are. I think we could have a whole seminar on co-ops versus condos. So it's Rashid, if you want to add something quick in there, but let's do that next.
Yeah, I would say the trade-offs for a co-op is you have low closing costs. For a house and a condo, you have higher closing costs. And co-op, you have to get approved by the board. Condos, obviously a house, you don't have to get approved by the board. That's really some of the major items when you're thinking about considering either one.
Some of these are definitely, you know what? I'm going to ask everybody if you have a topic or idea, not just a question that you would like us to, we're just doing general buying classes and they've gone really well. But I think there's some really fine-tuned classes we can offer moving forward. Somebody's asking about being a buyer that's a foreigner right now. I think we could do a whole class on freelance buying, and because there's so many intricacies to that. So if you there's something specific that you want us to host a webinar on, if you could put it in the chat, we can see if there's enough content to do it. But I'd be happy to do that. And I'm just looking at some of these other ones like HDFC properties. If you start making more money and you're in an income restricted property, they don't kick you out if you bought. Those are usually for rentals. So if you start making more money than the income verifications, they can't ask you to sell your property just because you've moved up. And that's one of the best types of affordable housing to me, is equity building affordable housing where you actually own the property and not rental.
Just remember, an HDFC, it does get a little tricky with financing. It's not impossible, but it's, again, something you want to have an upfront conversation. And like, don't say like, oh, I got a pre-approval for 600,000. That means that I can buy this HDFC for 400,000. You need to have another conversation. If you initially, for example, are looking at co-ops and then you decide to go HDFC, you need to make sure you have a conversation with your mortgage professional about that, because some programs can do HDFC and some programs can't. Right. So,
and also historically, because HDFC usually has bad finances, like the building finances for HDFC are usually not great. So banks try to stay with them. Like I know people that I've worked with that we've bought an HDFC, but that they ended up having gift money or they could buy the place all cash because of their tricky buildings. There's so many questions, guys. The next thing, using inlays. You concerned about using your in-laws for co-signers. What happens if they both of them pass away? What happens to the mortgage then? That's why you have a will, and I have a lawyer for that. You have a will. And my parents are my co-signers on my property. And somebody asked earlier, whatever they require, the bank requires of you, they will require of your in-laws if they're co-signing you on the property. So if there's a list of documents that they're going to ask of you and you want your in-laws on the property, on the mortgage, then your co-signers have to also get all of those documentations.
You can also, we've had it where we do agreements, like joint owner agreements. So your attorney can always, if you speak with your attorney about doing a joint owner agreement, if you're putting somebody on the property in order to purchase. The bank doesn't have to be involved in that aspect. That's more for after closing or the same day you close, you want to enter into a joint owner agreement.
Somebody's asking what is a REO property, and somebody emailed me about buying foreclosures. So I stay away from foreclosures for many reasons.
Well,
Rashida answered.
Yeah, so I represent clients that are buying foreclosures. REO is real estate owned by the banks. So there's different types of properties. A foreclosure property means the current owner still actually is the owner of the property. So up until it's actually on that foreclosure day sale by the courts, and it's that person can sell it and get the funds from that. Once the foreclosure sale has happened and now the bank has taken over the property, it's now considered a bank-owned property. A lot of times when you're buying REO properties, it's 100% as is. So they're not allowing you the price is what it is. You can negotiate prior to getting into contract, but inspections, they're not fixing anything. The utilities may not be on. So it's very important when you're buying REO properties that you understand what you're getting into. if you're buying a foreclosure property, as I said, it's a little bit more wiggle room because the seller still has some kind of control of the property. It hasn't been sold yet in a foreclosure auction. But your attorney, that the time periods to close, it can be really quick, very quick, depending on where they are in that foreclosure process. And it's also very important that your attorney reviews the title report, which shows what's happening, whether there's judgments, liens on the property, is there a list pendants from the foreclosure sale. So a lot of things have to be cleared up, which is where your attorney really needs to pay attention to the title report, even though they should be paying attention anyway.
Somebody asked about grants for New York City employees. So my husband is a teacher. I know that UFT offers credits for lawyers and other benefits. I would say just call your union. New York City employees usually have a union, and I'm working with somebody that even if you're not a New York City employee, or some employers offer access to different mortgages and banks through their company that can offer you real benefits. The mortgage company that my buyers are using are in Ohio. They got them from their employer. The seller had to verify all of their information through their mortgage broker to make sure, but they're getting a really amazing rate that they don't know if they would have gotten if they had gone through somebody not through their employer, because I think there's a real benefit there. So you should explore, if you have access to those and your employer is offering you any of those resources, you should definitely explore them. But is there any grants that people know about offhand that they want to share?
Not offhand. I said check the neighborhood housing services. They have a list of their grant program, but a lot of times you have to go through like a program. So if you're looking at maybe a year out, you can start doing that now, because you have to go through kind of their first-time home buyer programs in order to have access to their grants.
Somebody's asking me about the current market. Anybody else want to hear about the current market, to talk about what's going on? Yeah. Oh, people shaking their head, yes. So my perspective, a lot of people are leaving Manhattan, coming to Brooklyn. So the Brooklyn rents I thought were going to plummet are holding. But I'm getting landlords to pay the broker fee, which is really great. But most of my landlords I've had 10, 15-year relationships with, so it's glad that they're finally paying me after all these years of free services. So that's one thing. And I see it for sales. The sales market in Brooklyn is holding. I know in Manhattan that the ultra luxury market is taking a huge tank. Like, so if you had a 10 or 20 million property you were trying to sell, like I know there's a building by the UN that was sitting empty, that's like went on the market in November, and it's like nobody's moved in there. They're taking huge discounts for very ultra luxury stuff. And so if you're in that market, bless you. And that's where you can get like huge discounts apparently. There are a lot of buyers in the market that are looking for like, let's make a deal. And the properties that I have hold real value, and they offer the amenities that people want. So I have not, and none of my sellers, anybody that's like thinking about selling right now, they know that buyers are looking for a discount because of COVID. So they're not going to put it on the market unless they really need to sell. And so there's going to be opportunities from those unfortunate situations where people have just over leveraged themselves and taken too much risk. And so they need to liquidate their asset. And that might not happen for a couple more months because maybe they've gotten some mortgage relief. Everybody got 90 days by the government to do mortgage forbearance from their company, from whoever their mortgage is held by, the banks. And the other thing where they're going to be, property that you could get at a discount is there are going to be estate properties. Unfortunately, from people passing from COVID, we haven't seen a lot of them come to market yet because the courts are just opening up. So if you had somebody pass and you have to sell their property that they owned, you are just probably finally talking to their estate planner and going to probate and dealing with their estate. And in the next couple months, we will see those properties probably come to market. So I'm super busy doing rentals and sales and working with a lot of buyers, but also working with sellers. Went to a bidding war on one of my properties for sale. So at least people want to be in Brooklyn. I have never had any love for Manhattan to live there. I like Manhattan. I love New York City, but people want to really appreciate the quality of life that you get in Brooklyn and want to be here. And I think there's a demand for that. So I see a really strong real estate market and a lot of people that are excited to move here. You can ask me more questions about it if you want. Yeah, I like who wrote Brooklyn. Love it. How many mortgage lenders should you talk to, and do you need to worry about the effect of multiple pulls on your credit score? Lisa did mention that you should interview 2 or 3 people. I have like a questionnaire, but I would say you definitely want a mortgage broker who has access to multiple properties. The biggest thing about finding any of your experts, either your buyer's broker, your lawyer, or your mortgage broker, is that you want to feel comfortable with this person, that they answer your questions thoroughly, that they don't make you feel stupid, they don't use scare tactics, like that you're going to have a relationship and you're going to rely on this person to help you through this process. And you want to feel like they answer the phone, that they communicate well to you, you understand when they explain things to you, and that they you don't feel like they're rushing you off the phone, or you're hiring, this is a job, and you want to hire the person that's going to work hard for you and that you like and trust.
And I would just also mention that you probably want to try to get, Lisa, ask them about the fees. I mean, it's always an estimate, but that should be something that you're asking them about. I had a horrible experience with a mortgage broker recently, and I wanted to, I strangled him. I actually had him switch to another person, another lender, and I very rarely do that, but this mortgage broker had initially told him some fees, and then towards the end came up with 4 points, the points were ridiculous. And it was an FHA loan, and I called another loan officer that I deal with, and side-by-side comparison, and it was just, they knew the client wanted to close, so that mortgage broker tried to put some fees on there that was not acceptable. And you need an attorney that is able to review those fees and look at the closing costs and say, let me see that closing disclosure they gave to you. And also, I personally go over closing costs with my clients when they're about to sign. So I give them an estimate of what their closing costs should be looking at. So that's also very important when you're speaking to various mortgage people, is what are the fees? Are there points?
And the lawyers too. And just people that are transparent.
I'll just add that it's I think what's really, this whole real estate industry in New York, for every good person, there's some really bad people. And, really it's about, someone saying, can you send through the mortgage broker questionnaire? I absolutely have tons of email exchange with my clients, but you also really need to talk to any of these people, real estate, lawyer, or mortgage. You need to talk to them on the phone, because that's how you're really gonna have a feeling that this is someone that you want to work with, that you feel like Victoria said, that they're being clear with you, that they're being honest, that you get a good sense that you're in good hands with them, because the mortgage is the one that's bringing the money. This needs to be someone that you really trust, because without them, the deal doesn't get done. And the second thing I would say is, in terms of rate, obviously everyone always wants the best rate, of course. But you also have to realize, if you guys are just starting your process now, that rate is a bit hypothetical, right? What I'm going to tell you about rate today, rates might go down in 2 months, they might go up. No one really knows. And if anyone's telling you that they do, they're lying. So really what you're looking for is a relationship with someone that that they are being clear with you, that they're not trying to sell you on something with points when there's not points, that they are being upfront, and that you're really going to be in good hands with them. A really great resource to use for, again, not just mortgage, but legal and real estate, is go on Yelp, do a little research, just like you would with anything else. And if you're seeing, Yelp reviews that are great, not everyone, right, is good. Not every single review might be amazing. That's just the nature of our business. But if you're getting
Yelp, though, too.
But if you're getting a sense from Yelp reviews that, wow, these clients really like this person, they really had a good experience with them, they're really recommending them to their friends, that's probably a really good indication that this is someone you want to work with. So that's sort of, I think you should do research for these relationships that you're building across the board, because these are the people that you're going to be working with potentially on a day-to-day basis for the upcoming months while you look for your home.
The good thing is that there's no fees associated with having a buyer's broker. So I'm free, and I'm very transparent about that. I should actually, lead with that more. The other part of this I was going to say is that you do want to have somebody that is transparent. Rashida and I just had a client that we advised early on that she needed to switch mortgage companies because she wasn't getting a great rate and they weren't doing anything about it. And, it got recommended to her through her work, and she finally did switch, but she switched at the end, and now we're not closing. But we advocated for her because it was in her best interest. It was like a whole percent difference. They were trying to charge her for something. We had a long talk about it, and she decided to do it a little bit too late, and now it's dragging on. But it was our job to make sure that we looked out for her, because this person was not getting it was not in their best interest to go with this mortgage. It just wasn't. And I wish that from the beginning, she had listened when I advised like some other options. But, you can only lead a horse to water, and try to give people as much education and advice so that they can make the right decision for themselves. Because at the end of the day, it's up to them. So, what do you mean there's no fees associated with using a buyer's agent? So the seller pays the buyer's agent in New York. So if I'm helping you, when the deal closes, the seller pays me a portion of the commission from what they were listed with the listing broker. When you walk into a listing, that broker that is there, their fiduciary responsibility is legally bound to the seller. They are going to advocate profusely for their seller. My job is to advocate for you, the buyer, and make sure that you are not taken advantage of, that we see if there's money on the table that we can, everybody right now doesn't want to leave money on the table because they feel like we're in a leveraged position because of COVID. And you want to make sure that, if there's $5,000, $10,000 wiggle room. And the other thing is having a broker, I can say things to another broker that you are just never going to have the industry lingo or, finesse to like pull the information out of them. The reason that I got full price on the offer for Sunset Park that Andrew and Rashid is offering, the other broker called me and we had a very like frank conversation. I'm like, do this, do that. We'll make a deal. This is what I need to get for my seller. She's like, oh, I can get my buyers to that. I'm like, okay, I'm making a commitment to you. I know you're going to be a good partner with me. You're going to help me close this deal. We're going to work together. Like, those are the kind of brokers I want to work with. I know that I'm that broker to other people. So it makes me feel really confident that I can help my clients get the deal that they're looking for. It's just super important. Did that answer Kathleen Fink's question there? And do you recommend a certain amount of money to keep in your savings after the down payment? Yes, and for co-ops and some banks are going to ask you to keep, you're going to have reserve money left over.
And again, that should be a discussion you have when you're getting a pre-approval. So if when you get a pre-approval, there's a bunch of questions that your mortgage professional is going to ask. How much do you make? Where are you looking to move? What's the purchase price you're looking at? If it's a co-op or a condo, roughly what are the HOA fees you're looking at? And the other question they're going to ask is, where's the down payment coming from? And how much do you have in your savings and your retirement, et cetera? Why they're asking that is because depending on the property you buy, along with the down payment and the closing costs, you need to have so much in reserves, right? A bank doesn't want to give you a loan that all they see is the first month's payment. They want to make sure that you have the reserves so that this is a sound investment, not just for the bank but also for you.
There's a lot more questions and we're going to keep going through them. I'm going to take just a moment to stop and say, after this class, I'm going to send out an email that has this video and a wealth of other information. I have a home buyer's handbook that I have, and then I have a huge resource library of other information if we work together. But I do give everybody this home buyer's handbook to like get things started for you to think about. And it covers a lot of the stuff we're talking about now. So there will be some follow-up emails with information, but we're all available to talk to you about your one-on-one like situation. I think it's an incredible time to be a buyer right now. And it's exciting. I work mostly with buyers over the last couple of years, and it's just really, really fun and great time to be taking advantage of the interest rates. I'm very jealous of the interest rates. So I'm going to scroll back up to a couple more of these questions. You keep dropping them in. And if anybody wants to message us privately to reach out and talk later, we can do that. Can you send through a mortgage broker questionnaire? Lisa, can you share that with me so that I can share it with everybody afterwards?
Yeah, I think I sort of answered that question, but I'm happy to send a mortgage broker questionnaire. But I really want you to warn everyone that shouldn't be used in lieu of talking to a mortgage professional. So, I'm happy to send sort of a basic like 411 in terms of the kind of questions mortgage going to ask, but you should definitely be talking to a mortgage professional as well, because it's a personalized experience. With questions will come up as we talk that aren't necessarily on the questionnaire but are important.
Kathleen also asked another great question about, do we see wiggle room with sellers' willingness to assume some of the buyer's closing costs? I would say on new construction, yes, that used to be like in the 2008 crash, I had negotiated for the developer to pay some of especially the transfer tax for my deal until my mortgage product disappeared and then other things happened. So I had to renegotiate my whole situation. But that was a big time where developers were paying for the transfer taxes and maybe some other closing costs. I would say that happens there, but not so much on resale. I just did a deal where I got $1,000 credit of closing costs for Long Island, which was surprising. And I have never sold a house out in Long Island ever, but it was somebody I have rented an apartment to that wanted to work with us, which was exciting. So that answers that, hopefully, about the closing cost assumption of this from the sellers. Do you need to give a mortgage broker all of your financials in order for to start having a conversation with them?
No, not at all. You can absolutely start with a conversation, and usually what I do is a conversation with some ballpark numbers just over the phone about how much do you make. Tell me about your debt. Tell me about what you're thinking. And then as it gets closer, typically after you issue a pre-approval, then I request some of the documents so that we can confirm the numbers that you gave me. And our company personally uses a secure private portal service, which I would recommend that you try not to use more of a portal service than an email, because it just adds an extra level of security, because these are sensitive documents.
Someone asked about buying a place with a business space in it. Correct, Eileen? So the thing then about that, and I'm going to let Lisa take over here, is that usually then it doesn't become a residential loan anymore. It becomes a commercial loan. Lisa, are you doing?
It actually depends.
Depends. Okay.
It depends on the commercial spaces. So there's one way you could do it as a residential. I've actually done this for a client that had a property in Macbeth, where it was a commercial below that was like a small gallery space, and then their apartment up above. It has to be an FHA loan. You can only do it as an FHA loan in that situation. It's really specific, Eileen, to the specific square footage of the residential and the commercial spaces. But then if that doesn't work, then yes, there is a commercial option, and we do commercial loans as well.
And if you own your own business and you're going to put your business in more than 50% of the building, there's also like a special mortgage product for that too that I've done a handful of them. You can get them through SBA actually, and so a lot of banks have been doing them recently. So if you own your business and want to open a retail shop, you could buy a piece of property that you could put your business in.
Yeah, I have a client that's doing the SBA one as well.
It's a great way for your business to own keep your rent down and be your own landlord. It's very difficult as a business owner. That was that question. There's so many questions. I'm trying to just scroll through. Do you recommend a certain amount of money to keep in your savings after down payment? I've seen some places require a year or two of monthly payments in the bank account after down payment. I would say that's mostly for co-ops, but Lisa or Rashida, do you?
Yeah, I think, what I said sort of earlier about the reserves amount, and it depends on the specific property. So and the purchase price. Some mortgage programs will require 6 months of reserves. That's just at the housing payment. Some will require less than that. So it really depends on what you're actually buying, whether it's your primary or second home. Investment property. If it's an investment property, you're always going to require more reserves than if it's a primary. So it's sort of case by case specific, depending on, but it doesn't have to be liquid, right? You can use things like your 401k or your retirement to have those reserves.
Someone asked about looking into schools and how to find good schools. So that if you go on the Department of Education, they do have a way to do the ratings. Brokers can't answer those questions about schools for you. You can then also, depending on the neighborhood, if you're thinking about moving to Bay Ridge, you can then just go to the Bay Ridge Parents Facebook group and ask them. And you will get lots of range of information about what kind of experience their kids are having or have had. And I really think that's a really good resource. My husband's a teacher. His school has not a great grade, but it's really different progressive. They do restorative justice in his school, like all these sorts of things. So it depends on the experience. And I think actually talking to parents in that school district is going to give you a lot more information than a website that rates schools based on test scores, right? I might be, you know, biased because I'm very protective of the teachers in my life. Somebody's asking about where to find REOs, and I'm also lost on that one. What else here? Grants, how do you calculate? Can you calculate how much you can afford based on your income? Lisa, just on your income, could you calculate how much you could afford?
No, you're going to need to have some sort of idea of your liabilities, of your debt. So that could be a ballpark figure, or, you know, but then it's really, that's really one of the reasons why you need a credit report to help you understand what your debts are. But so you need a little bit more information than just your income.
Somebody's asking about if you're up in the air about New York versus New Jersey, should you, because based on home prices, is it recommended to make a decision, then contact a mortgage broker? I'm like, regardless of where you're moving, you should talk to a mortgage broker to figure out how much you can afford. Because not only if it's like, okay, I'm going to buy a condo in New York City, they're going to help you figure out what your monthlies are going to be. Oh, but hey, I'm buying a house in Jersey. They're going to figure out what your monthly is going to be because the taxes in some parts of Jersey are astronomical. So you want to really have somebody that, for me, I am not an Excel person. I am not a numbers person. Like the data, the person that can calculate all that information and help me decide how much monthly expenses I'm going to have is really important to me, so that I'm like, okay, my monthlies are going to be $4,000 because my taxes are included in that. So I think that you need to, the area doesn't matter. It matters how much you can afford. And you don't always have to purchase the max. If you get a pre-approved for $600,000, it doesn't mean you have to buy something for $600,000. Can you buy a 2-family with FHA, higher loan limits, but use the home as a 1-family?
Yes, if you can afford, if you can qualify as the 2-family without the extra rent, then as long as it's a legal 2-family, then yes, it does. In terms of what you're going to do with the property, that's up to you. But it just has to be, you can't, if you, for example, have a 2-family with a illegal in-law, you cannot qualify as a 3-family home. It has to stay a 2-family.
Okay, I think that does student loans play a major factor into your debt?
Yes, they do. They do. You need, I mean, it depends on what kind of student loans you have, but that's probably the most important reason to run credit if you have student loans, because we need to know how much we have to hit you for in terms of the debt. Typically it's the monthly payment or 1% of the loan amount, depending on what kind of loan you have. The most important thing is that you're paying your student loans. If you are thinking of buying a property before you go into forbearance or deferment for your student loans, if you're thinking of doing that right now with COVID, you should talk to a mortgage professional. Just to make sure that it's not, you just want to make sure there are no late payments showing up on the credit report for your student loans.
Okay, I think that did I cover everything? Is there anything, questions that I might have missed? You can put it in the chat now, because there was a lot, kept on going and going, and I tried to go all the way back to ones we missed. So if we didn't answer anything for you, you can go ahead, put it in the chat, or else I'm going to wrap everything up, and you guys can talk to us personally about how do you guys service investors? Anybody want to answer that?
Well, I have clients that are investors and they're looking at properties. They come to me once they've found the property. So main thing that we do is putting together the investor agreement, operating agreement. If they haven't formed the LLC or the corporation yet, we assist them with that. But definitely you're going to need an attorney if you're looking at investing property, because you're going to want to form an LLC or a corporation. You're going to want to have an operating agreement or a partnership agreement.
And in terms of, for me, investment properties are just another mortgage transaction. So the same situation and process applies, though obviously the guidelines are a little different. Same idea of starting with a conversation, and we do both residential and commercial loans. So I can do, an investment property that's a condo to an investment property that's a 4-unit building.
I usually don't work with investors. I have really strong values on housing and tend to not, I don't work with big developers either. So I'm mostly working with like small mom and pop. I do work with small mom and pop that have like generational equity, that they own multiple properties because their parents, inherited them. But I would say that I usually am not advocating for investors to take property off of the market for homeowners. It's not in my value system to do that. So then somebody asked, Lisa, do you handle FHA loans in addition to regular mortgages with co-signing?
Yes, you can do. So an FHA can have a cosigner, and I can do that. But again, the important caveat is making sure that the loan can work with the cosigner, and that's on a specific. That's a private, a personal discussion to make sure that the application works. But yes, I can do cosigning and FHA. I think that's it.
I think that's it.
Great questions, guys.
Yeah, really good questions. I felt like I was on my toes there. You guys kept me on my toes. Okay. Oh, thanks. Whoever Hannibal Collins is, I love you too. And Elaine. So I'm super excited. There was so much attendance today, and I would say an overwhelming amount of women. That was really felt really great too, to be speaking to our tribe. So if you guys want to reach out to us personally, thanks for coming today. If you want to ask any questions, but you will get an email with a ton of resources just for attending, and I appreciate all of you. And everybody, please stay safe out there, stay well, and thank you for letting us postpone this a week too as well. That was nice of you to all show up. Okay, bye guys. Have a good afternoon.